Stocks and precious metals surge on record AI spending and hopes of interest rates being cut next month. My name is Jessica Amir, a market strategist here with Moomoo. It's great to have your company on this Tuesday, the 25th day of November. So markets bounced overnight because investors rotated back into tech and higher risk assets, as well as those precious safe haven metals such as silver and gold. Why? Well, a couple of reasons. One of those was because two Fed officials simply came out, Christopher Waller and Mary Daly, basically getting behind the fact that they're signalling for the Fed to cut interest rates next month. And this saw the probability of an interest rate cut rise up from 30% to 77% overnight. So rate-sensitive stocks really led the charge, with the Nasdaq rebounding very strongly, up 2.6%. It's now up about 4.3% from last Friday's lows. But buying was broad as well, which was really pleasing to see. And this was across the entire S&P 500. Most sectors except two rallied. And why was this? Another reason was because UBS says that the sell-off is behind us. But I would just question this because we do have to look at the VIX. Yes, the VIX, the market's fear gauge, has fallen. It's to a level of 20. This is positive. This is good for stocks. When fear or the VIX falls, stocks rally. But I would just question, you might want to see the VIX or the volatility fear gauge fall further before you can declare a market bottom is in. Regardless, there's always dip buys everywhere, and dip buys were diving in thick and fast into crypto. The crypto king, Bitcoin, was pushed up higher. It's now up about 10.5% from its recent low. But let's move to today's focus. AI, the need for speed, innovation, and the race to build the future is here more than ever before. Now, despite warnings of an AI bubble, we are seeing global spending continue to power higher. Corporates are expected to lift AI budgets up from 1% of a company's total spending to 10% by 2030. And here are the 8 developments that have happened of late, some of those overnight. Well, firstly, Amazon. Amazon overnight announced that they plan to invest $50 billion in AI infrastructure to support US government agencies. Secondly, we saw Anthropic come out launching their third major AI model. That's their third major AI model in the past 2 months. This new AI model is called Opus 4.5. Means nothing, but what it means to you is that it's designed for coding, and it's designed for organizations to simplify complex tasks. The third development overnight was perhaps a continuation of investors believing that Alphabet, the company behind Google, is going to be the new AI leader. We saw last week the company upgrade their AI model. They announced Gemini 3 just 8 months after launching 2.5, basically signaling the rapid progress for AI is gaining pace. And the fourth thing that you need to know is down south in China. Tencent announced that they are expected to exceed AI capex by last year's budget. So they're looking to spend more than 10.7 billion this year, and that basically reflects that they are increasingly looking to spend and build more out on AI than ever before. The fifth development in AI perhaps is from Alibaba. They've committed 52 billion to AI and cloud over the next 3 years. Meanwhile, the company behind TikTok, called ByteDance, has recently budgeted for 20 billion in capital spending this year. Most of that, of course, you guessed it, is going to be spent on AI. But perhaps one of the game-changing moments on the big end of town was Nvidia. Nvidia, obviously the biggest company in the world and the chip leader. Nvidia was touted to potentially, I guess, finally lifting a veil on sending their latest AI chips to China, potentially. And this is because Donald Trump came out saying that he could soon be allowing NVIDIA to send their most advanced chips to China. But we're just waiting to see if final approval is indeed definitely going ahead. So don't jump the gun. But do consider, meanwhile, we have been seeing a lot of action in NVIDIA beneath the surface. And specifically, I've been seeing a huge increase in orders from Chinese clients directly to NVIDIA for NVIDIA's other chips, not their latest AI ones. So companies like Foxconn, Alibaba, Tencent, and Baidu have all recently increased their orders of NVIDIA chips sharply over the last 3 months. And the eighth consideration for AI is that overnight NVIDIA responded to fraud allegations. NVIDIA rejected that it's basically not doing anything that's irregular in terms of its accounting. They basically come out saying, hey, we are not Enron. And for those that don't know Enron was a company that collapsed basically at the mercy of dodgy accounting in the year 2001. NVIDIA's CEO, Jensen Huang, also dismissed claims about specific irregularities raised by the short fund heavyweight, I guess you could say, Michael Burry. The company also said, yeah, our accounting is sound. The company's backed by companies that are increasing their orders of chips. Now, the takeaway from these 8 developments basically underscores the powerful theme is here that the world's biggest companies are increasing their spending on AI, and that is needed so these companies can grow and scale up. So basically the narrative here is the investment cycle for AI appears broad, intact, and it's only gaining pace and accelerating. That's something for you to consider. However, we do have to consider the bear case. Is this a potential bubble? Where there's a couple cases that are supporting this, but perhaps you could say that the bear case is a little bit more quieter than the bullish case that we've painted out. So the bear case remains that Michael Burry overnight doubled down, basically on his AI bubble views. He launched a newsletter overnight. Second of all, we do have concerns persisting about AI company debt levels and regulatory pressure, and we're also seeing some rising concerns about potential AI bubbles in China. The debate is still ongoing. The long-term thematics do remain in place. AI is here to stay. There's always going to be a naysayer around. So if you're not into stock picking, you might want to consider some ETFs. There's a couple large ETFs that give you broad-based exposure to a lot of semiconductor and chip companies. One of those goes by the ticker of SOX, one of those by the ticker of SMH. The semiconductor manufacturing ETF, SMH, by way of an example, is up by about 240% in 5 years, showing you strong gains have been made in the past, even if you are not into stock picking. But do remember that, of course, AI stocks are volatile on the short term, but over the long term, we do see powerful gains being made. Even at a company level, of course, remember NVIDIA, their shares have gone up by 1,460% in 5 years. Broadcom up by about 860% in 5 years. Let's move to stocks to add to your watch list, kicking off with, of course, Broadcom. Broadcom was one of the biggest advances overnight. Their shares jumped 11%. They hit their third highest price in history, $377.96. Their shares are now up 60% year to date. So for those that don't know, Broadcom actually works hand in glove with Google. Broadcom is the company that is actually right behind Google's TPUs, and they're specifically used in Gemini's new 3 model. So that is what's pushing up Broadcom's shares. Of course, remember that Google 3, according to Google, they are actually outperforming ChatGPT and another model called Claude Sonnet. So that's something for you to consider, and that supports upward price pressure on Broadcom. Broadcom also recently overtook Meta in terms of market cap, and some would say it's increasingly the stock to watch for AI picks and shovels. It's rated a strong buy among analysts on Wall Street. The average price target $404.59. Changing pace to Coinbase, their shares jumped up 6.5% overnight, obviously because crypto rebounded. However, Coinbase, it's still down about 25% this month, but it's also down this year. But options are now suggesting more upside is ahead for Coinbase. That's if you look at the calls, which are bets for their shares to rise, versus the puts for their shares to fall. So the options are swinging. The institutions are increasingly bullish on Coinbase. With the spread between the puts and the calls now being $30 million. Coinbase is rated a buy among the average analysts on Wall Street. Last but not least, let's end on an Aussie stock, and that is Webjet Travel. So we spoke about airlines yesterday and why you may want to keep an eye on travel stocks broadly, with Americans expected to spend a record amount on travel. And perhaps Webjet is a stock that you might want to keep on your radar. This morning they reported half-year earnings rising 17% and saying that they're on track for record earnings for their full year 2026. It has to be said, though, that their shares have been in the gurgler. They hit fresh lows last week, but some are betting the bottom is in. Perhaps that's why their shares rose almost 4% yesterday. And their shares are down 6% over the past 12 months, but its outlook is definitely improving if you go by what the company have announced this morning. And the company is rated a buy among analysts, and that is Webjet.